What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is the fact that AMC is looking primed to explode. I'm going to go over everything that you guys need to know technically about what AMC is looking like right now and what we could expect to see going over the next couple of trading days. Now, in addition to this, we're going to be going over the Ortex data, the max pain, and we're going to still talk about what is going on with the option chain in terms of that $15 strike flip, where more calls are going to be in the money than puts, which is actually going to make the market makers kind of switch their hedging, which we're going to talk about later. And in addition to this, we also have some more updates on these really large banks potentially having issues with these credit default swaps. So we went over that situation a couple of weeks ago about how Credit Suisse was looking to take on more risk. Now, the credit default swaps that are basically insuring against the failure of Credit Suisse skyrocketed to levels that we hadn't seen since 2008. Now, the same thing is happening right now with JP Morgan as well, so we have to talk about that too. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC today closed the day at $14.94. Now, it did end up hitting a low of the day over here, as we can see, of $14.07. So the range is pretty big today, up 1.98%. Very solid day to start off the week. Now, when we come over to the Ortex data over here, let me just give this a quick refresh. So what we're looking at is 17.46% estimated short interest. Now, again, we are waiting for these exchange reported short interest numbers to come out to see if these estimates are going to change. In the max cost to borrow, we have right now 34% average, 13.1 in the minimum, 10.79, with 143.63 million shares on loan. Now, I want to go over what AMC is looking like technically right now because it's looking really, really good. Now, when we come over and take a look at the 4-hour time frame that we've been looking at here, yep, we've seen this chart a couple of times. What we've been calling for is this 13 EMA to come above the 200. You see a retest of this 13 EMA and then hopefully a bounce off, which is exactly what we saw today. We are seeing a breakout, a retest of the 200 EMA, consolidation, and a test of that 13 as it comes above that 200 EMA. Very, very bullish signs. RSI is in a good spot. The momentum slowing down a little bit on the MACD, but that can switch really quickly. And then we are also seeing the shaft trend cycle still in a bullish trend. But here's the other thing that we haven't talked about recently. When we come over and take a look at the daily chart for AMC, we are dangerously close to a cross up on the daily. The last time that this happened was right before or right on the day that we ran, or right before the day, we ran all the way to 32 and then we got that halt. So what we're looking at here is a culmination of very, very, very bullish technical indicators here that could end up sending us to the upside over the next couple of weeks. Now, here's the other thing that I want to kind of make clear to everybody because we are still going to be influenced by the overall market. Now, AMC today was moving, kind of having a mind of its own when the SPY was coming down. AMC was holding up very, very, very well. But it is still very possible to get another test of this 13 EMA here. And what we have to realize is that we have CPI data coming out on Wednesday. If that CPI number comes out hot, we could be in for another retest, but it could just be a healthy retest, another test of this 13 before we trend back to the upside, and it would be making a higher low here anyway, which I don't see a problem with at all. So overall, AMC is looking very, very good. Now, I do want to talk briefly about the options chain. So quickly on max pain here. Max pain's at 15 for this week, and since it's a monthly options expiration period, you would expect to see the max pain be a little bit higher just because of the vast amount of open interest and volume that you're going to see on a monthly options expiration date. Now, coming over to Stonko Tracker here and looking at all of the options that are basically going to be accounted for in the open interest, we have 53,000 calls in the money, 77,000 puts right now. When we come over and take a look at AMC's exact options chain here, though, well, there's 24,000 call contracts at 15 here, and when you switch it to the puts, 13,000. So if we're just doing those numbers here, the puts would come down to, let's say, 63,000, and the calls, let's say, what was the call number again? What was it, 20,000? The call number, 24,000. So you'd have more calls in the money than you would have puts. That's a very bullish sign because the market makers would then be unhedging the puts that are running out of the money and then hedging the calls that are running in the money by going out in the open market and buying shares. Now, the real big indicator of us going on a very significant run, that price point that I've talked about a couple of times in the past, is that $20 level here for those 49,000 call contracts there. That's going to have a pretty significant effect. And again, you'd have all of these options running in the money too as we make our way up there. But again, anytime that we talk about a gamma squeeze, it's an if this, then that statement. If we run through 15, 1550, 16, all the way up to 20, then we could really start to see that buying pressure. But until then, we're hoping that these technicals can carry us up until those levels where we can get boosted up by that market maker hedging. So I hope that makes sense for everybody. If it still doesn't, make sure you guys drop a comment down below. I will do my best to answer any of those comments. Now, we need to talk about what's going on with these large banking institutions. This first one here is the credit default swaps against Credit Suisse. So we can see here recently they have skyrocketed, and we have not seen these levels since about 2011, 2012, or even 2008. And this is basically showing you at its core basically the market for people betting against Credit Suisse or betting for the default of Credit Suisse. So people are seemingly very bullish on the default of this large banking institution. Now, Credit Suisse is notorious for engaging in risky business practices, and we've talked about why exactly this might be happening with Credit Suisse right now. But it's very, very interesting that we're starting to see this come back up with JP Morgan as well. Now, it did recently come back down, but you're seeing these credit default swaps in the odds in the people betting against these large banking institutions starting to come back up again. Now, does this mean that the whole financial system and these large banking institutions are going to fail? Not necessarily, but what this does is gives you a really good insight into what big money is doing. They are hedging against a very, very, very bad scenario, which would be large banking institutions failing. This isn't necessarily a technical indication of what's going to happen in the market, but if this large money group of people thinks that this is a possibility, well, then they're going to hedge for that possibility happening in the future. And that's what we're seeing right here with these credit default swaps. So in general, this is a situation that we're going to continue to keep an eye on because this is very important right here to kind of get an insight into what these large market participants are hedging for in the future. But again, going back to AMC very quickly, it's looking like we're in a very good spot right now. Let's see what happens tomorrow with 15. Let's see if we can get a little bit of a bounce, potentially what we like to call a turnaround Tuesday. And let's see if Amy can get back up to that recent high that we were seeing, 1532. Let's throw this on the hour chart here, 1665 all the way back in May. Let's see if we can break all the way above those levels and start to approach that $20 price point. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I will see you guys in the next one.